Now, traders, this is where we're actually going to start getting ourselves involved in looking at these charts. Okay? So we're moving on over to our next point. Our next point right here is going to be candlesticks. Now, candlesticks traders, right here, this is what we see on our chart. When I take a look over on candlesticks, it is the green and the red. I could see candlesticks over here, all these red candlesticks. I could type in Apple. I could type in the S&P 500. They are all built up in candlesticks. Now, how do we read these? How do we understand what candlesticks really are? How do we say to ourselves, okay, hey, how do I understand what a candlestick is? Well, in the very simple manner, a candlestick, and I'm going to draw this on out, is going to have a few different parts of it, okay? We are going to have on a up candle, a candle that shows that we're moving on up, is we are going to have our open, we are going to have our close, we are going to have our upper shadow, and we are going to have our lower shadow. The green candles represent that the stock is moving up. When we are moving up, we are going to be seeing green. Now, it is going to be green within that specific time frame. So you can see the SPY is 1 minute. That means each candle is represented in 1 minute. So you can even take a look over on, see this little gray box at the bottom when I'm moving my mouse? This candle represents 9:29. This candle represents 9:31. This candle, 9:32, 9:33, 9:34, 9:35, so on and so forth. Each candle is going to tell me on that specific minute where it opened up at, where it hit a low, where it hit a high, and where it closed at. So, where did we open up at? We opened up on this candle right here, let's just say at the price of $1. Where did we close at? We closed at the price of 105. What did we hit within this time frame? We hit the price of 107 as the high, and we hit a low right here of 0.98 cents. So let's say this is a 1 minute time frame. In a 1 minute time frame, this candle opened on up right here, dropped on down to 98 cents, spiked on up towards the price of 107, and finished at the price of 105. That is what this candle is representing. That's what this candle is showing us. So if I took a look over on a different time frame here, such as the daily time frame, you guys can see at this moment that each candle is represented by an entire day. So this candle at the price of 511 ran all the way up towards the price of 523, then again closed the day at 517. If it's a green candle, it moved on up. And if it's a red candle, it's just going to be complete opposite, and it's going to be that it moved on down. So if I take a look right here and I go, okay, there's a red candle right here. A red candle, let's draw this one out a little differently. Let's say we have a small upper shadow and we have a very long lower shadow. Well, we opened right here, we closed right here. And let's say this is on the daily chart. What would that be showing us? That would be showing us that on this day, we did something like this. We opened up at the price of, let's say, $10. Okay, open up at the price of $10. We went on a nice spike, maybe up to the price of $10.25, right? We only spiked up a little bit. We ended up crashing all the way back on down towards around the price of $5. And then we closed the day back on up towards around the price of $7. So this candle is now giving me the idea of what has happened just from, again, seeing that at this moment, okay, hey, this is our red candle right here. We had a little upper shadow, which showed at some point we had a little spike. Then we had a monster drop as we have our lower shadow that came on down. And then we finished and closed at this price. So this is going to help us become better traders. This is going to help us understand what is going to be happening in the future, because if we study candlesticks and we study different charts here, we're able to walk ourselves through on what happened over on these plays. So like on the S&P 500 on this dip buy stock, came on down to 510, spiked all the way up to 523, finished off the day at 517. Then the next day, spiked all the way up to 529, came crashing all the way on down to 521, finished off the day right around 522 right there. The next day opened up at 528, spiked on up to 530, crashed all the way down to 518, finished off the day right around 519. I already know what's going to happen on this day. I already know what the whole entire previous history was, and that's going to be able to help me be able to figure out what I could be doing next, what this stock may be doing, what may be happening here coming up in the future. Now, something that used to always confuse me All right, something that used to always basically trip me on up is I would say, how is this the SPY, and how is this the SPY? How is this Tesla, and how is this Tesla? I don't understand it. The thing is, traders, we want to look at these in different time frames. When we look at these at different time frames, you can see Tesla is on a 1 minute time frame right here. I can also see the daily chart is in a daily time frame. So basically what it is when I'm looking at a 1 minute time frame and then I'm looking at a daily chart, I am looking inside this red candle here. This is today. This is 8-12. Today, it is 8-12, August 12th. This candle is getting made up of what is happening over on this chart. So what we have here is we opened up at the price of 199. We crashed on down towards 194, and right now we're at 197.25. Take a look over here. We opened on up right around this. We opened on up at what price is that? 199. 199 crashed on down towards around the price of 194, and right now we're at the price of 197. I could see that on the daily chart instead of even looking over on that 1 minute chart. So why? What is the point of this, team? Well, the point of this is it's always great to be able to understand what's actually happening on this day and then be able to see its past chart history pattern to be able to figure out what it may be doing in the future, where it has support, where it has resistance, where it has different indicators. So how do we have, or what is the right time frame to always be in? The correct time frame to always be in is going to be, we always start off in a 1 minute or 2 minute time frame. That's what I always like to begin with. 1 minute or 2 minute time frame, and I always have a daily chart open. I always like to see where are upcoming indicators. Where is there going to be past chart history? Where is there going to be previous resistance? Where is there going to be previous support? What could be coming on up here in the near future? So when I take a look over on Tesla, I know that there's going to be 200-day moving average at 202, 50-day 13 EMA. I can also see that in the past right here, you guys can see this, that there is a lot of strong resistance. Let me turn off these indicators here. Turn off the indicators. Take a look. You guys can also realize that there's going to be a lot of strong resistance right around where we had some old tops, old top at 200, breakout at 200, old top at 200, old top at 200, bounce play off 200. So I'm able to see the daily chart, see previous indicators, see previous chart setups, be able to again get a little bit of a better adjustment, and then be able to actually see what's going on within this time frame. Because if I'm a daily chart, if I'm a day trader, I'm not just staring at the daily chart. I want to see what's going on with this day. Same exact thing as, let's say I'm taking a look over on GNLN. GNLN, I want to see what could this play be doing on the day? Like how high could it go up to? Okay, hey, we got all the way up to $10 resistance. Where's the next main resistance line? Well, it seems like the next main resistance line would be all the way up towards $12.65. That's its last big spike. So if all of a sudden we ever got up towards $10 plus, we could go all the way up to $12.65. But as of today, when I take a look over on this play, I could switch over to a 1 minute time frame and I could say, okay, well, most likely this volume is going to move through after it breaks through this daily chart. Or after it breaks through this downtrend. So basically what I'm looking for is I'm constantly and consistently comparing what has happened in the past to, again, what could be happening here in the future. I'm looking at the present moment and trying to get a game plan. I guess the easier way to say this is the daily chart is going to help me formulate a game plan. It's going to show me how high we can go, where previous reversals are at, where these pivot points are going to be at, and the actual minute chart is going to show me when I could enter. Daily chart sets the game plan. 1 minute, 2 minute chart, the intradaily chart is going to allow me to understand when can I pull the trigger. So I could pull the trigger potentially when we break this downtrend to see if we start getting some buying volume. Or maybe again, I think, we're going to fall all the way down towards the 200-day moving average at 528. As long as this downtrend keeps on holding, I'm going to keep looking for reversals. I'm going to keep looking for shorts, betting that the stock is going to fall on down. So do I just stay in a 1 minute and 2 minute time frame this entire time? The answer is no. What I'm going to be doing is I'm going to be adjusting this time frame as the day progresses. So for instance here, traders, let's go back over to a different chart. Let's go over towards Apple. Let's think about it as in Friday. If I am going over on a 1 minute time frame, and let's say it's Friday afternoon. Friday afternoon, guess what the issue is? I might think 216 is the high of the day. I might think the low of the day is 214. And I might say, oh, wow, this is awesome. Guess what? We had a bounce play here at 214. Here's a top resistance at 216. But it's because I can't see the start of the morning. If I scroll on down, take a look. Oh, wait a minute. That's not the low of the day. Oh, wow. We start all the way over here. So really what I want to be able to do is as the day progresses, I want to be able to have the most detail possible while still being able to see the start of the day. So as of, once you get past 1 o'clock or so, you can't see the start of the day. So maybe again, at the start, you're in a 1 minute time frame, but then maybe you move to a 2 minute time frame. And then as we get to 3 o'clock, or maybe we get to 1 o'clock, 2 o'clock, you switch over to a 3 minute time frame. And it's okay to jump back and back and forth every now and then to 15 minute time frame. See if you see maybe some sort of uptrend here and there. But what I like to do is I like to have my game plan basically come from the daily chart. Or again, every now and then I might switch over to a 60-minute chart, basically seeing just a huge previous history. And then on top of that, I usually just watch the intraday chart in the best detail I can. Daily chart or 60-minute gives me a game plan. Then I again move over towards the 1 to 2 minute chart to see when I can actually enter for that game plan to actually execute. So what is so great about this now? Now again, we understand these time frames. And the example I always give is you can't read your text or you can't read a book if it's so close to your face. When we're in the 1 minute time frame, we have as much detail as we possibly can. But if we keep holding it in a 1 minute time frame, we are holding it so close to our face. At some point, we have to adjust. We have to take a couple steps back. And sometimes, again, taking those steps back is just going to be a 5 minute time frame. Going back towards, a 2 minute, a 3 minute time frame. So we can just be able to read it a little bit better. Just like we move our phone away, just like we move a book away. By just moving it back a little bit, it's just going to help us understand what we have. So that is going to be extremely important. Now, we already have a little idea about these candlesticks now, don't we? We have a good idea about these candlesticks at this moment, but what I want you guys to really gauge and what I want you guys to understand, the number one thing that candlesticks, are going to help us with is going to tell us when an upcoming reversal might be happening. And that's beautiful. Because if I can predict when a stock is going to go up, guess what? I could be able to jump in right here and I can make money. And if I could predict when a stock is about to go on up and then move on down, well, guess what? That's going to be beautiful because I could jump in right here and I can make money. I can bet that a stock is going to fall by doing puts or again by doing shorts. I could bet that a stock is going to move up and make money by doing right here. Let me grab this. By doing calls or just by buying shares. Or by buying shares here. So that's beautiful. We make money on the upside, we can make money on the downside. So how do we understand which way is a stock going to turn? The number one way and the best thing that I do while reading charts is I look for upper shadows. Now, yes, the same will work on lower shadows, but upper shadows are going to give us a great idea of where weakness is now starting to come on in. So if I see a stock that is moving up, moving up, moving up, it's great to know that it's about to start getting weak and start reversing back on down. And the reason why is an upper shadow shows that stock, the buyers moved in on the play, but couldn't hold it and started reversing. So imagine if we have strong momentum. We have this candle showing we're moving up. This candle showing we're moving up. This candle showing we're moving up. This candle showing that we're moving on up. And then all of a sudden we have this candle where it shows that we spike, 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 spike. We try to spike more, but now the direction is starting to fade. Now the direction is starting to move on down. Now things are starting to get a little bit weaker. So that is almost like the idea that I always give as in climbing the mountain. When we climb a mountain, we climb to the very top, we get to the top of Mount Everest, and we put a flag at the top. And we say, yes, I have made it. I have climbed to the top of this mountain. And then guess what? Now it's time to go on down. Team, take a look. What do we have at this time? I can go over here and I could see we have an upper shadow right here. We have spike, 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 spike. We have an upper shadow. We start fading back on down. We have spike, 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 spike. We have an upper shadow. We start getting some red candles and start fading back on down. This is what helps me be able to make money in the stock market every single day. Already, you're getting one of my secrets. Already, you're getting an easy way to basically turn the stock market into an ATM. Should we look at some different examples here? See what we have on this day? Let's go over to GNLN. GNLN, anything that's really standing on out here. Let's go over to like a 2-minute time frame. GNLN, this play. What do we have? Well, if I take a screenshot of this stock, and we try to figure out, okay, we have very big spike, very big spike, very big spike. I would say this is obviously, what we have here. We have our upper shadow. It did look like it was about to dump right there. We had one last little pop, right? Notice what we have though. Every upper shadow is followed by red candles. There's an upper shadow, there's a red candle. Here's upper shadows, there's red candle. Here's upper shadows, here's red candles. Here's an upper shadow, here's a big dump. Here's an upper shadow, here's more red candles. Here's an upper shadow, here's more red candles. Everyone, just take a look at this. This is the number one top gainer on the day. Notice how the upper shadows lead to, that's the top, red candle incoming. What if you knew that? What if you knew that, okay, we have an upper shadow, red candle incoming, we can take advantage of that, and we can either, number one, get out of a play, or number two, we can say to ourselves, hey, you know what? It's probably time for me to be able to move on. It's time for me to be able to reverse here, right? So it is great that you guys can be able to realize this. Sometimes, again, you have to switch to a different time frame. Upper shadows at the top of the mountain. Guess what? We start fading back on down. Now, yes, guys, you can even see lower shadows do indicate bounces back on up. So when you do get a lower shadow, it does indicate that you could get a nice bounce back on up. I'm just kind of looking at some different charts here, or different spikes here. PSIG, we spike, upper shadow. We can, again, come back on this one in the future. But when I see that we have upper shadow, upper shadow, upper shadow, upper shadow, we are obviously struggling here. We are obviously getting weaker here. There's obviously a great chance that we have a lot of room to be able to fall back on down, right? And that is so important for us to be able to see here, to be able to watch. So the upper shadow is going to be so crucial and so important for every single trader. Now, same exact thing with lower shadows, okay? Lower shadows could be able to get a bounce play. But that is going to be the number one thing I look for while I'm trading. So a lot of times, when I'm getting myself involved in, over on the S&P 500, I will be looking for, where is there lower shadows? Oh, wow. Guys, take a look at this. The S&P 500. I'm not doing anything crazy. It's not like I'm taking out random pictures that only happen every now and then. I'm asking myself, oh, wow, hey, there's a lower shadow. Get ready for a reversal towards the upside. Oh, wow, hey, wait a minute. Here's the other day. Here's an upper shadow. Look how it dropped. Oh, wow, here's an upper shadow. Look how it dropped. Oh, wow, here's an upper shadow. Look how it dropped. Oh, wow, take a look right here. Here's a lower shadow. Look what happened. We bounced back on up. Hey, wow, here, take a look at this, guys. There's a lower shadow. We bounced on up. Can everyone see how just crazy already that this is forming? Green candles, up. Upper shadows, reverse. Lower shadows, reverse. I see uppers. I see lowers. We can start making money on these sides. How beautiful is this? How great is this for you guys to be able to make this profit, for you guys to be able to make this cash? I absolutely love that. I think that's absolutely gorgeous. I think that's absolutely amazing. So candlesticks. Now the thing is, traders, there will be multiple and many different types of candlesticks out there. There are many types of candlestick patterns, and a lot of you guys can go through them and just even head on over to Google and just type in candlestick patterns, and you guys will see pictures that look like this. You guys will see pictures that look like this. Candlestick cheat sheet, where we have neutral, basic patterns, bearish candles, bullish candles. You're going to see bullish engulfing, bearish engulfing, bullish harami, the evening star, bullish tweezers, marabou, gravestones, dragonfly, hammer, and pinbar. There are so many different candles, and some people actually just study candlesticks. They say, hey, I don't care what's going on with the chart. I don't care what's happening with our earnings. I don't care what's happening with this or that. Let me just, again, go ahead and study candlesticks. And that's when we are going to be able to be successful. But I use candlesticks more just to be able to, number one, see their movement within the certain time frame that I select, to be able to have a good understanding of these time frames. And then on top of that, I always like to keep my eyes peeled on these upper and lower shadows to be able to get a great gauge on what's going to be coming on up here next. So let's lock it in. Done. Now, what else do we want to be focusing on? This is going to be a big one right here, traders. This is going to be support and resistance. Support and resistance. This is probably going to be one of, if not the most important section of this entire bootcamp. This is going to be crucial. And the reason why it is so crucial here is because when you have support and resistance is going to tell us exactly what we want to be looking for as to where pivot points are going to be at. So, let's type this on out. What is support? Support essentially is going to be where bounces are going to be happening. It is going to be a platform. It's going to be a psychological number where we have bounced multiple times in the past, where we can be able to move ourselves back on up. So it is going to be our floor. Our resistance is just going to be the complete opposite. This is going to be, where are we going to get rejected? This is going to be our ceiling. This is going to be our roof. where every single time we have hit this area, we start coming back on down. We have our bounce play, we have our resistance area. If we can be able to figure out where a bounce is going to happen, if we can be able to figure out where resistance and where a reversal is going to happen, think about how much money we can be able to make. If I know that a stock is going to bounce at a certain area, that's going to be absolutely great and absolutely beautiful to see. So, what we need to know is support and resistance is going to be a floor and going to be resistance. And it's going to be broken up into 3 different sections. We are going to have our natural support and resistance. We are going to be having our past chart history, support and resistance, and we are going to have our detailed support and resistance. So what is going to be natural? Natural support and resistance is going to be every whole dollar, sometimes especially smaller plays, even 50 cents. So let's just keep it easy. It'll be like $1, $5, $10, $15, $25, $50, $100, $200, $250, $500, $750, $1,000, etc. So these are going to be strong, natural, psychological numbers. Areas that when we come up to, even if there's no past chart history pattern on them, guess what? We usually see some sort of reversal or we see some sort of bounce play off of that. And the reason why this is so important, the reason why this is so big is because you might say, why is this stock turning? It's because it just is hitting this natural wall. For instance, if a stock is 99 cents, you are going to realize that a lot of times a stock that is spiking on up from, let's say, 60 cents to 70 to 80 and now 99 cents is going to have a lot of trouble right next to $1. There's no difference from going from 99 cents to now $1. But to traders, it is a massive difference. To traders, we're now saying to ourselves, oh man, oh, this is crazy. Oh man, this is wild. We're now going to $1 per share. And when we go to a $1 per share move, traders, this is crazy to be thinking about because now it's a big psychological jump. Just like when we go from $4.99 to $5 or $9.99 to now $10. We're now again $10 per share. We're out of the single digits into double digits. $99, $99, now $100 per share. You will see that traders, for some reason or another, always look to sell at these areas. Now, again, let's just see how well this worked on today. Did we have any play that came on up towards a strong natural resistance line and maybe started reversing right at that area? Let's take a look. GNLN. Traders, told you, I'm not making this stuff on up. Is it odd that we came on up to the price of $10 and right when we came up to the price of $10, guess what happened? Traders just could not break through this area. Now, this is because this is natural resistance. We move ourselves, GNLN. We spike on up to $10, we fall on down. We spike ourselves up to $10, we fall on down. We spike ourselves on up, we try to get it, we fall back on down. Let's try one more time, we fall back on down. The more times you hit a resistance line without getting the breakout, the better chance you have of getting weakness. Now let's think about this, traders. Let's think about this in a different example, in a different light. Let's imagine right here that there is a group of 100 people, and these 100 people see this wall, and they say, guys, let's knock down that wall. Let's again break through that wall here. And all 100 people at the same time run as fast as they can. They run as fast as they can. They lower their shoulder. They hit the wall, and they say, oh man, my shoulder, that hurts so bad, man. People say, I'm going home. I'm done with this. I'm going home at this time. I don't like this. Notice how volume starts diminishing at the bottom because volume is the amount of shares that are traded. But at the same time, we could see how volume was at the top and then volume starts getting weaker and weaker and weaker. You could also think about volume is how many people are trading. The more volume we have, the more shares, the more people are probably trading the stock. But at the same time, if we start seeing volume get weaker and weaker and weaker, it's usually because people are giving up on something. We came up to $10, everyone hit their arms, said, I'm over this. That didn't work out at all. But then there's always another group that says, come on, let's try to do it again. We can do this. We try to break it. We almost had, oh no, I'm going home. That hurt my shoulder. I'm out of this. And then maybe one last little attempt. Oh, I'm over this. And then we get this massive sell-off. So you need to think about it as psychology, Not just by looking at a chart. We hit $10, we got to know, hey, take some profits, people are going to be selling. We're going to try to break it, it didn't work. Try to break it, it didn't work. Try to break it, didn't work. People are going to say, screw this, I'm over this. I'm moving on from it. And then guess what? Everyone walks away, everyone goes home, everyone says, I'm going to a different play. So this is the beauty of resistance. I just told you that we are most likely going to see pivot points, reversals at strong natural resistance lines. Guess what would happen if you shorted at $10? Shorted at $10, short, you would win every time. Imagine if you are riding this on up and you're saying, ooh, this guy told me it's going to go up to $25. I'm going to keep on holding. But you said, oh, wait, hold on a second. Sean Deckmar told me that at $10, we're probably going to have some struggle. Let me lock in 50% of my profit. Boom. We're taking our gains. We're taking our profits. We're all set, ready to go here. So GNLN, this is a great example of our natural resistance here. This is a great example of us understanding what's going to be coming on up. So let's go ahead and keep going back over towards this. Let me grab this. And we can go over towards natural resistance and support. Now, again, same exact thing. If we were a $15 stock and we were falling on down to the price of $10, guess what? We'd get a bounce play off $10 the same way we get rejected at $10. Now, we can also look at past chart history. Past chart history pattern is going to be find the common platform. Where did we struggle, right? Where did we struggle in the past? This is what past chart history patterns are all about. Find the common platform. Where did we struggle in the past? Where did we have issues? Where did we have problems? Where did this not be able to hold on up? So let's just go back over to the S&P 500. The best thing to do when you're saying how much higher can the S&P 500 go up to today? Just think about it. How much higher can the S&P 500 go up to? I want to look at where did we struggle? Where did we have issues in the past? And I'm just going to go back into a larger time frame so I could see the past few days. I'm going to go back over to a 15-minute time frame. And when I take a look over on a 15-minute time frame, is there anything that stands out to me? Nothing stands out to me too big right now. So I'm going to say to myself, oh, I can actually see something here. I'm going to look at the current price and I'm just going to say, is there any area where we continuously and consistently get rejected? So I'm looking for that platform. I'm looking for that ceiling. I'm looking for that floor. Where are we going to have that reversal? So what I'm seeing right here is I see a bottom bounce right here. I see top, I see top, I see top. Let's connect some dots. Let's just connect some dots here. And let's go right across the board here. You know what? This right here looks like this would be a great area for a potential bounce. Why would this be a great area for a potential bounce play? Well, if I see we had a bounce right here, and I see a top, and I see a top, and I see a top, that's already telling me that 533 area is holding up as a nice area. Bounce here, top resistance, top resistance, top resistance. Top resistance right here, top resistance right here. Broke on out, fell back on down. Bounce play, little bit underneath it, bounce right back on up. This is helping me understand, okay, hey, this is a platform. This is an area where I would have success with looking at, okay, let me get a dip buy. This is what we talked about earlier by putting the odds in our favor. Now, this would be more as a day trade. Now, if I'm looking more for maybe a swing trade or something a little bit larger, maybe I would say, all right, hey, I still see a very large uptrend on this play. Let me go ahead and have my main support line, if I ever wanted to just, play this on a larger scale, all the way up at 524. Bounce play, high or low, bounce play. Let's even, again, scroll on back a little bit farther. Let's go back to a 30-minute time frame, see if there's anything that stands out to us. 30-minute time frame, S&P 500, where's the next main platform? Everyone take a second. Take a look at the S&P 500. I'm going to put this in a full screen. What do you guys see out of the S&P 500? S&P 500, where can you see that we've had problems in the past, that this is probably going to be having some sort of problems in the future? So what I always like to do is I always like to put some sort of line at our current area. This at least gives me a gauge at where we are currently at. Then I'm going to look at where is there a platform area? Where is there an area where we had lots of bouncing, lots of issues, lots of top resistance? And I'm probably going to go right next to that 540 mark, right? Is that what you guys are thinking as well? 540. Notice what we have here. Bounce play, moved on up, came crashing all the way on down. Bounce play, bounce play, bounce play, top resistance. So if I'm seeing past chart history pattern, larger time frame, getting myself an understanding, orange line is where we're currently at. Now I already know the orange line is going to have, if this falls back underneath that 533 mark, we have that top resistance and all that stuff that we already talked about before. Right now though, our next main area, take a look at this, guys. Bounce play here at 540, bounce play 540, bounce play at 540, bounce play at 540, moved itself on up, bounce play at 540, 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 top resistance. When we come back up to 540, you better believe there's going to be some sort of trouble. You better believe we are going to have some sort of issue right around this 540 mark. So we definitely want to keep our eyes peeled on this. And that's going to give me a great idea of where I'm going to be pulling the trigger, where I'm going to be getting involved on this play, where I am going to be able to have the greatest amount of success. Remember, we already talked about this. Place the odds in your favor. Think about what can I do to have the best chance of success. So the S&P 500, if I see that we have reversals, as in bouncing and bouncing and bouncing, most likely there's going to be a reversal somewhere right around 540. And that's going to be extremely helpful. Now, some people may see these charts in different manners. Some people may say, Deck, you know what? I see something a little bit different that I don't think everyone else sees. And I might say, well, what is that? They might say, well, I see that low downtrend that you have, but I also see that we have a nice uptrend channel right here. And it seems like that's been holding on up as some sort of resistance as well. Now, the beautiful thing is, team, a lot of times you'll see this happen where you might say, Deck, I see that we have right here. I'm just going to put this in black. Put that in black. This is our channel, as you guys can see. We have a channel right here. That's, again, bottom support. We have top resistance right here. Notice, hit, reverse, hit, reverse, hit, reverse, hit, reverse. And guess what? They all line up at the price of 540. So if you, again, see that the S&P 500 has a channel, guess what? The channel resistance, the next reversal is at 540. If you guys, again, see that the past chart history pattern where we bounced and bounced and bounced and bounced and bounced, and we keep scrolling on back, and we have, again, bounce and bounce and bounce and bounce. If you think 540 is resistance, and you say, no, channel pattern's resistance, guess what? They both line up at 540. So for me right now, I would be an extremely confident trader that we are going to have some sort of red candles, that we're going to have some sort of upper shadow, that we're going to have some sort of reversal right around 540. And I would also feel very confident that if ever came back on down towards this price, this would be a great bounce play. Bounce play, bounce play. Guess what, ladies and gentlemen? This right here would be a great dip buy and bounce play. And I also know that right here we reversed and fell and fell and fell. And I'm going to have an idea that probably right around this area, we're going to fall back on down. And this could be a great, easy money-making opportunity. So remember, we talked about this earlier. Setting up a trading plan, setting up a game plan where we have our entry, we have our exit, we have our target, and we have our why. Right? And our why is our most important factor. Our why is us actually understanding what we have going on here. So the why is so important. The why is so crucial for this to be able to say, hey, you know what? I can now trade with confidence on this play because I know exactly what I'm looking for. So this is what I mean by past chart history pattern to start figuring out a game plan over on this play. So beautiful. What is up next over on this? Well, on top of that, team, we are also going to have detailed. Now, what would detailed be? Detailed is going to be our indicators. Now we're going to be going over indicators in the future, but our indicators are going to be over on our daily chart. Now, this could be a couple different indicators. We are going to have the 50-day moving average. We are going to have the 13 EMA. We're going to have the 200-day moving average. And then on the minute chart, we are going to have the VWAP. So a great indicator to always have is going to be adding on the minute chart, the 1, 2, 3, 5. Is going to be the VWAP indicator. You guys can also see, look at this, bounce play off the VWAP, bounce play off the VWAP, top resistance, got rejected off the VWAP, right? VWAP area is always great bouncing, always great area where you could see where we're considered bullish and bearish. We're gonna be going over indicators in the near future, but you can just see as of now, where we keep on bouncing, it's usually right next to this black line. That's always great. Now, again, you can take a look at a lot of different plays, and a lot of different plays are going to always be having trouble at their VWAP. So you can see VWAP rejected, VWAP rejected, VWAP rejected. Let's actually make this a little bigger here, guys. What do you guys realize about the VWAP? Well, Deck, every time it hits the VWAP, it gets rejected. Beautiful. But do you guys also realize that it also has upper shadows? Can you guys also realize that we have candlesticks right here? How great is that? How beautiful is that? Spike and drop and spike and drop and spike and drop, and then we have our sell-off. And then we have a spike and a drop, and then look at this, we're above it. So we have bounce play, bounce play, bounce play, bounce play, and then we spike ourselves back on up. I mean, that is absolutely awesome. So the VWAP is giving us areas of resistance and support with the upper shadows, and that's again going to be more of our detailed. Now we can also again take a look over on our areas of 50-day moving average, 200-day moving average, and 13 EMA. So these are going to be areas that we are going to be looking at as well of where there could be trouble. So Tesla, does anyone realize that if we look at the 200-day moving average, we hit, got rejected, hit, got rejected, hit, got rejected. Last few days, every time we have come up to the 200-day moving average, we've gotten rejected. Guys, do this. Go back over to a monthly chart and type in the S&P 500. And if you guys realize this, the best bounce, the best entry in history that you can have on the S&P 500 is going to be a bounce off the 50-day moving average on a monthly chart. Take a look at it, guys. All the way behind me in 2011, the best bounce play is off the 50-day moving average. Then the best bounce play on the S&P 500 in 2016 was off the 50-day moving average. Then the best bounce play in 2018 was the 50-day moving average. Then the best bounce play at 257 back in 2020 was off the 50-day moving average. The best bounce play in 2022 was off the 50-day moving average. Traders, as you guys can see, the best bounce play that we can have is always off the 50-day moving average on the S&P 500. From 2010 to 2016 to 2019 to 2020 to 2022. Usually the 50-day moving average on average is going to be touched every 3 years. So if we hit it back in 2022, that means we will hit it again in 2025 or potentially 2026. So that is the next best time to get the absolute best entry that you can get over on the S&P 500 that we have seen over the last 15 years. It has bounced once, twice, 3, 4, 5 times over the last 15 years. The perfect bounce has always been the 50-day moving average. That is what I mean when I am talking about detailed support and resistance. So when we're taking a look over on these charts, that is what is the most important factor here, traders. Support and resistance really just comes on down to the pure fact as it is giving us ideas of where we can be able to reverse at. When we have our support, it is just in simple terms. This is going to be our bottom. It is going to be our floor. So we are going to have our support right here. We also are going to have our resistance, which is going to be our top, and this is going to be our ceiling. This is going to be our roof. And all we're going to be looking for is the stock to go back and forth in between them. And you will realize multiple times that stock goes back and forth in between these areas, and you are going to say to yourself, hey, here's top resistance, here's top resistance, here's top resistance. You can also see right here, here's bottom support, here's bottom support, here's bottom support. And if you enter at these areas, that's when you are going to have some of the best chance of success. That is when you are going to say to yourself, hey, bounce play, bounce play, bounce play, top resistance, top resistance, top resistance. We could take a look at multiple, support and resistance lines, just like when we take a look over on the SPY. So over here on Fox Runner, we click news alerts and it says the SPY chart is looking very strong. The downtrend channel has broken. When we're taking a look at a channel is just going to be a path where basically we have support and resistance. It could be an uptrend, it could be a channel, it could be a downtrend channel. Where what we have here is we could see top of the channel, we hit it, we get rejected. Bottom support, we hit it, we move on up. Top resistance, we get rejected. Bottom support, we hit it, we move on up. Then of course, right now we're moving back into the bullish side of this channel now starting to form. So how's the S&P 500 doing today? So S&P 500 moving itself back on up. As we could see right here, charts looking bullish, downtrend has now broken. So we could see downtrend channel has broken. We are moving ourselves on up. We're watching to see if this is going to be able to continue to climb, continue to spike, and continue to get some momentum towards that upside. So S&P 500, very, again, great play to always be looking at support and resistance, but a lot of it comes down to practice. One of the best exercises that you guys can do is go over to the S&P 500 or something relevant. You can go over to GNLN, you can go over towards RVNC. This is a pretty simple one. RVNC, take a second, do an exercise right now. Everyone say, where's support? Where's resistance? Where's there trouble? Go. And try to go as quickly as you can. Well, when I take a look over on RVNC, pretty simple, guys. Top resistance area is going to be all the way up next to $35, right? Bottom support area is again at $10, right? Where we could see we have bounced time and time and time again. Here we go. We can also see at this moment, $10 is going to be strong resistance, but we're also underneath $10, natural resistance line. Bounce play, bounce play, bounce play, bounce play. Top resistance, top resistance, top resistance, top resistance, top resistance. If you want to ever get involved in RVNC, back in $10, you know you have great odds of it slowly moving up to $35. Once it gets up to $35, you know you have the odds in your favor to be able to see this fall back on down. So the big thing that support and resistance gives us is going to be able to give us what we call channels. So when we have these perfect channels, these perfect setups of support and resistance, where it tells us exactly where we want to get involved over on these plays, that is going to be extremely helpful. Because if a stock is just going up and down and up and down, we know exactly what we want to do. Team, channels will form on nearly every single stock. Sometimes not penny stocks that are, just kind of going straight up on spikes, but the majority of plays, you are always going to have some sort of channel setup. Okay? The majority of plays, you're going to have some sort of channel that you can find, especially on blue chips. Now, the thing is, there's the saying, don't mess around in the middle. Okay? Don't mess around in the middle. If we have this channel set up and we're just going to do, RVNC, for example. RVNC right here, perfect channel setup. The last thing we ever want to do is mess around in the middle. All of our entries should be at the high, or all of our entries should be at the low. So let's just think about this. Let's think about if we could go in the past and we enter anywhere from here, anywhere from here, from anywhere from here, from anywhere from here, and then we enter once we get back into here. Let's think about this, guys. If we entered here, we might have, number one, we missed this one. Why? It didn't come down close enough, but still followed the right idea. Number two, we had success with this one. Da-ding, we again won on this one. Number three, da-ding, we won on this one. Number four, da-ding, we won on this one. Number five, we could have a quick stop loss if this one did crack underneath. So basically, if we think about this, we never got filled on this one because it never came on down. So we are currently sitting at $0. We would have had massive success on this one. So let's just put that 100 out of 100. We would have had massive success on this one. That's 100 out of 100. We would have had massive success on this one. That would be 100 out of 100. And if we entered right here and it cracked underneath the channel, well, we have a quick stop loss. So maybe we lose 50, right? It's because we'll follow that 2-to-1 ratio. So we would have 0, we didn't lose, we won 100, 200, 300, and since we have a stop loss, we get to say we have won 250. Now again, 250 could be anything. We could say $1,000, $1,000, $1,000, lost 250. So again, we could be up, $2,500, right? Whatever it may be. But I'm just showing you the odds of you winning if you get in low are absolutely tremendous. Now think about this on the opposite way. Well, Deck, I want to do a put contract. I want to do a short, bet against the play next to the red line. Guess what? Massive success. 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 Every single time you take a look over on these plays, massive success. Now I know this is getting a little crazy, so I'm just going to clean this up a little bit right here. Now, what do we always say though? Don't mess around in the middle. When we don't mess around in the middle, that's when we are going to actually be able to see a lot more winning. That's when we're going to see a lot more profit. That's when we're going to be able to make a lot more money. Because let's think about it. What do I mean by that? Don't mess around in the middle. Traders, what if I say, ooh, I got a good feeling. I'm going to jump in right here. I mean, the thing is, it could go up, it could go down. Maybe it moves up, The thing is, traders, sometimes, randomness happens in the middle. When you are buying in this section, just take a look. It goes up a little, goes down a little, goes up a little bit. It's falling here. It's going up. Now it's coming down. It's going up. Well, it's going down. It's going up. We don't ever want to get involved in these. When we are trading stocks, we want to be able to get in at lows and hold them to the top. And we want to be able to short at the top and get in at the bottom. I don't want you guys chasing the tops. I don't want you guys getting in at the top and saying, ooh, hopefully it goes up higher. I want you guys, when a stock is overextended, saying, ooh, I think it has room to fall. Right? That's where you guys could be able to make money. For example, we could take a look over on like SMCI. SMCI, the amount of people that have bought over the price of 1,000 and are now stuck and in the red and losing all their money as the stock is now crashing on down because we formed upper shadows, because the stock is overbought, because now we know as a stock spikes on up, we want to wait for that upper shadow reversal coming on up to $1,000 natural resistance line and now coming crashing all the way back on down. If we know what to look for, these answers are given to us. If we know what to look for, these answers are going to be supplied to us and we could be able to make a great amount of profit. How beautiful is this, ladies and gentlemen? How great is this to be able to see that just from the things that we have taught already today, from upper shadows to natural resistance line of 1,000, to being able to see these channel setups, we can be able to say, all right, let me get involved in these plays. Traders end up losing way too much, way too quickly, way too often. Because guess what they do? They jump on hoping the stock goes up higher. Stock goes from $10 up towards, again, $20. Oh man, I'm gonna jump in right now. Oh man, I cannot wait. I'm gonna jump in. It's gonna go up to $30. And then guess what happens? All the way back on down. Traders, how many times have you ever jumped in on a play and the moment you jump in on a play, it does complete opposite? Why is it every time I get involved into a play, it does the exact opposite of what I want? Why is it every time I get involved in a play, it just comes crashing on down? Why is it every single time I jump into a stock, it comes crashing back on down the opposite side? Well, 9 out of 10 times, it's because you are trusting your, I'm going to say you're basically trusting your visual too much. You are waiting to be confident. I said you have to be confident when news comes on out. I said you have to be confident right when these hot press releases are out. You have to be confident when you pull the trigger knowing it's going to go on up. You are waiting and waiting and waiting for a visual of confirmation. That's not good. If I see a stock go from $10 to $20 and I say, ooh, I'm going to buy in now. No, the stock has already spiked from $10 to $20. It's now overbought. Well, I know it's good right now. It's the number one top gainer because it went from 10 to 20. So obviously it's good now. No, it was good. Now everyone's going to get out soon and you're going to end up just giving your money away to someone who's lower. For instance, hey, let's take a look at GNLN today. Number one top gainer on the day. GNLN. Hey, Deck, stock went from $2 to $10. I'm going to jump in now. No, it's at $7 now. You can't be the last person. You got to be the first person. Well, how do I become the first person? By studying, by watching this boot camp, by learning how to find hot press releases, by doing the right things, right? Everything that I'm teaching you. And if you are, again, late to the game, we can short it. We can bet against these companies. Well, Deck, what about TRNR? TRNR, I lost on this play today. Well, why'd you lose on it? Well, it went from 35 cents all the way up to 90 cents, came right up to $1 and got rejected right next to $1. Oh, it got rejected after the stock spiked up 150%. Oh, it got rejected after the stock ran up to $1 natural resistance. Oh, it got rejected after we started forming upper shadows. Oh, this all makes sense, doesn't it? This all now is saying, yeah, I get why it would fall now. It's overbought. People already made money on it. Now they're locking in profits at natural whole number resistance after upper shadows are forming. Now it's starting to turn and starting to fade itself all the way back on down. So this is what I want you guys to really gauge. This is what I want you guys to be able to understand. This is what I want you guys to be focusing on when you're thinking about where do I actually want to get in. When we're entering these plays off these supports and resistance lines, we are getting bounces off support, we are getting resistance, and we're looking for reversals back on down. This is so crucial. This is going to lead towards so much success. So, traders, we are moving on with this party, and we are done right here with support and resistance. Trend lines. Now, trend lines are just going to be a different type of support and resistance. Trend lines are going to be able to help you find what is bullish and what is bearish. So we already showed you this over on Fox Runner here, as in showing you what is considered bullish and what is considered bearish. But trend lines are just going to be a support and resistance line that is on some sort of diagonal slope. So really what it comes on down to is, starting on off, I do want to show you these examples of trend lines just because these examples are going to be so significant in just helping you really understand on how they work. So a trend line is going to happen just like this. We will see uptrends and we will see downtrends. And when an uptrend forms, All we are essentially looking for is multiple bounces. Now, when we have these multiple bounces, the stronger and the longer that we bounce, the better the trend line is going to hold. But the longer and stronger that the trend line is, when it does crack, we will see a strong reversal. Now, this trend line is going to be telling us bullishness and bearishness. It will show us how long we are able to hold on to a play before it crosses over into the opposite side. So in this factor, we have bounce play, bounce play, bounce play, bounce play, reverse to the opposite side. You can see right here, bounce play, bounce play, bounce play, bounce play, reverse to the opposite side. So honestly, how would we even trade this? So the moment is, the secret of the game is when you find an uptrend or you find a downtrend, you want to be able to enter as one of the first people. Now, you're probably learning from this boot camp that it does come down to first come, first serve in the stock market. The people who get in first are the people who are going to make the most amount of money. The people who get in first are the people who are going to profit the most. And the people who are slow and the people who get in last are the people that are going to end up just giving away their money to the people that got in earlier. So as you can see, most of the time you're always going to have to wait for 1 to 2 bounces to form to know that an uptrend is going to happen. Now, when you get very good and you see that a stock is maybe moving on up, there are times that you can actually assume where the bounce is going to happen depending on this uptrend, and you could actually get in looking for that uptrend, looking for that trend line to develop. But the normal way that most people trade dip buys and most people trade these bounces are going to be, we see a very big spike on stock PTCT. It gets a bounce. Then it moves back on up. It gets another bounce. Once we have number one, once we have the first bounce, and we have the second bounce confirmed right here, number 1 and number 2, now we can start connecting the dots. And we could start assuming that this is going to be our new uptrend. And as long as this uptrend holds, we are now considered bullish. Once this uptrend cracks, we are then going into the opposite side where this is now considered bearish. So when we take a look over on the PTCT, we can do this now. We see a bounce, we could see a bounce. We have our next dip buy right here. This would be the entry we want. Remember, we don't want to wait until the tippity top. We want to try to get in as early as possible. So this entry right here, as we could see, is going to be probably right around the 1080 mark. This is going to be 1080 entry. Now, as we get filled at 1080, we are also going to place a stop loss probably right here at the price around 1060. Now, this is really great to be able to know because the thing is, as we hold on towards this bounce here and this bounce here, if this stock ever did crack, look how much we would lose. We would lose 20 cents. Now let's make it easy. Let's say we have 1,000 shares. If I get in with 1,000 shares and I end up losing 20 cents, that is going to be, I lose $200. That's not the worst case scenario, right? That's not too bad. To jump in on a play with a 10,000 share investment, and we are saying the worst thing that can happen is that we lose $200. I mean, that's pretty awesome to have that as our risk, that as the bad thing that could happen in our trade. Now, what's the good thing that can happen in our trade? Well, obviously, as long as we know that this trend line continues to hold, well, guess what? Here's a bounce, we move on up. Guess what happens as we keep on going? Here's another bounce as we move on up. And then guess what eventually happens, traders? Well, what eventually happens is we do end up cracking. But guess what? We keep moving our stop loss up with our trend line. So eventually we get out right here. If we got in at the price of 1080 and now we are getting out at the price of 1150 and we have 1,000 shares. Can anyone do that math? 1,000 shares. We are in at 1080. We are out at the price of $11.50. That is going to be giving us a grand total of $700 in profit. So we just did a 3-to-1 ratio that we talked about earlier. And all we had to do was watch this trend line. Once this trend line formed, we got in on the bounce, We have our stop loss once we crack. Once we go from bullish territory down to bearish territory, we start seeing that reversal and we move on. We can also see, traders, as we always talked about, here's an upper shadow, which led to a reversal. Here's an upper shadow, which led to a reversal. We could see here is natural resistance where we do have one chart, past chart history pattern where we have here's an old high, here's an old high, here's an old high, here's a hold high, and then eventually guess what happened? It just gave on up. And then we start switching on over to the bearish side. So that's great for us to be able to realize how much potential is in this chart, how much money is in this chart, how much we can be able to thrive and have success within this chart. Take a look right here, CLRB. CLRB, bounce play, bounce play, bounce play. Then we had the sell-off. Look at the bullishness, the bearishness area right there. Take a look right here. Bounce play, bounce play, bounce play, bounce play. We had the sell-off. Look at the bullishness and the bearishness. The name of the game is to try to get the uptrend as quickly as possible. Now, what else do you guys may realize here? You guys can realize that we basically have every uptrend on a very similar angle. I'm not exactly sure, what is this, a 45-degree angle? It's usually always on this like 45-degree angle, where we have, here's again, a 45-degree angle. Here again, a little bit steeper than a 45-degree angle. Take a look right here, right around a 45-degree angle. And this is how sometimes we can actually predict on what's going to be that next possible bounce opportunity. Where's that next possible bounce area? If we do get a dip buy, if we start moving on up, where's that next bounce? Because sometimes I'll be in chat, I'll be live streaming over on Tradecaster, and people will say, Deck, how did you figure out that we were going to get a dip buy at this mark? Like a stock will do this. It'll spike it'll start right here. It'll start coming back on down. And then I'll just say to myself, say out loud, hey, guys, get ready for a potential uptrend. I know we started here. And if I just draw out a 45-degree angle here, this would be the next dip buy. And a lot of times it'll come back on down. I'll give it a chance. I'll still put a stop loss, somewhere right around here. We'll get our dip buy. We move ourselves back on up. And guess what? We are now in so early on the dip buy that we could be able to make mass amounts of profit until it cracks on off. So yes, most of the time, great dip buyers are going to be filled here or get filled here. Bad dip buyers off the uptrend are going to be the people that wait too long for the visual confirmation. They get filled all the way up here and they end up losing all their money. We want to try to get in superb dip buying, which is going to be know that 45-degree angle and try to get in even before that uptrend starts. If you, again, have to wait for one confirmation, get in on the third one, fourth one starting to push in, fifth one is too late most of the time. So you guys can see, one bounce, two bounce, great. Three bounce, great. Four bounce, you're starting to push it. Fifth bounce, starting to get a sell-off, right? One bounce, awesome. Two bounce, great. Three bounce, okay. Fourth bounce, you're starting to push it. Fifth bounce, sell off. Right here we have one bounce, awesome. Two bounce, great. Three bounce, even fourth bounce, sell off. Take a look right here. One bounce, two bounce, three bounce, four bounce, sell off. Usually anything after three, you start putting yourself in a little bit of trouble. All right? Take a look at this, traders. We have an uptrend. We have our uptrends a lot of times that show us from bullish to bearish. Here's again, I know we looked at this picture already a few times today, but it's the same exact thing. We have a downtrend essentially. We could see our breakouts, our big buying moments is when we break this downtrend, where buyers move into the bullish side. So what is the S&P 500 doing today? Taking a look over on the S&P 500, this thing is all over the place right now. Take a look at the SPY. SPY right now, traders, cracked on down, spiked all the way on up, and I'm assuming some sort of news must have just come on out to make this, huge red candle at this moment, because the S&P 500, this thing is just being more indecisive than, you as a teenager. The S&P 500 spike on down, massive spike on up as we finally broke into the bullish category. Now starting to come back on down a little bit more. So I'm assuming there is going to be a little bit more news at this moment. So let's see what we have here next though. Traders, as we can see on almost every single play we look at, we can always find some sort of uptrend or downtrend. Right? So when I'm always taking a look over on these charts, this is what I'm doing. I'm always going at the top gainers, on the plays that have some of the most momentum. And I ask myself, where can this go bullish to bearish? For instance, I take a look over on TRNR. TRNR, this play right here, just went from bottom, here's second bounce, third bounce, fourth bounce, fifth bounce, sixth bounce, sell off. Team, this is today's example. Today's example over on TRNR, bounce, 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 bounce. How could we have traded this one today? How could we have gotten ourselves involved in over on TRNR today? TRNR, as you guys can see at this moment, you guys can see bounce play, bounce play, bounce play. We want to enter somewhere right around here. This is our entry. We want to go ahead and say, hey, have the confidence, stop loss underneath this area, and then guess what? We just keep moving our stop loss up. Hey, deck, we're coming back on down towards that area. It doesn't matter. Our stop loss isn't hit. Stop loss isn't hit. Stop loss isn't hit. Stop loss is finally hit. You're telling me if we follow trend lines, we follow the 45-degree angle, we follow that, we get in and we just have a stop loss underneath this, we are making profit from this area all the way on up to this area. Talk about a massive gain. Talk about a massive profit right here, because this is when we're going from bull all the way on over towards bear, where we are going from bull to bear and we are crossing over on our trend lines from this bullish side on over towards this bearish side. So trend lines, if it's uptrends, if it's downtrends, it's the break of the trend line that's going to switch the momentum from one side to another. We're looking for bounces, or if it's a downtrend, we're going to look for the hit it and get rejected back on down. These are pivot point areas, 45-degree angles. After about the third bounce, things start getting a little bit more sketchy. We want to always try to get in on that 1, 2, 3 bounce. 4, 5, 6 is most likely when we're going to start reversing, and these are going to be great areas for you to be able to hold and be able to keep locking in those gains and those profits. So that brings us over towards trend lines, and we are going to be able to lock that on in as done over on this day.